now what I do is now I go to my profile and I see I have to scroll down, and we did it. We did it. We are live, Simon.
Excellent.
Yeah, I'm very excited about this, and it's so wonderful to have you as a guest here. And I see Guy Mission is here, and thank you very much. And I see the living logo. So again, thank you so much for being here. And I've been watching you as well, and what a wonderful host you are. I see Mark is here. So Mark, thank you very much for being here. And especially thank you to the person I have the pleasure of looking at. So thank you very much, Simon Mihaljevic. Is that right?
That's pretty close. That's as close as it gets.
That's as close as I can get. That's it. I have a little bit of a list, but I'm not good at even pronunciation within my own words. So I keep it simple. So I want to thank you so much for being here. And this is Investor Series number 5. So at first we had Valina, then we had Tracy, then we had Mark Schneider, then we had Anthony Pompliano. So they're in very distinguished company because now they've got you. So I want to thank you very much, Simon, for being here. Would you be kind enough to introduce yourself?
Sure. Well, thank you for having me. You said my name is Simon Mihaljevic. I'm the founder and the managing member, whatever you want to call it, of the Bullion Reserve. I've been in the investment business. I grew up in the Soviet Union. I came here when I was 19 with a suitcase and $100, not the proverbial $100, actual $100.
Wow.
That was capital controls in the Soviet Union. You were allowed, every person was allowed to exchange $100 worth of dollars. That's simple. Wow. And you could take a 20 kilo suitcase and no passport. You had to give that up.
Wow.
So we came with the family into the United States. So it's 1978, 79. And I've been in the investment business for, I guess, now 35, 36 years, of which the last, previously, mostly workouts, credit, distressed investing, and 20 years, the last 20 whatever years, structured credit. The Big Short, Little Short, whatever, all that.
Yeah.
And so in 2012, 13, 14, I fully focused on gold, switched, closed my other business. And that was born out of basically three factors. One was the conclusion that I drew after the 2008 crisis that the financial system and the monetary system that we have and the debt levels that we have put us on the path of some sort of massive restructuring. They call it balance sheet restructuring, redenomination, whatever you want to call it. The great devaluation, because if the assets and claims on those assets are not backed by real cash flows, then at some point you have to restructure the assets. And because every dollar of debt is somebody's asset, then if the debts cannot be paid, that means the assets need to be adjusted to the level of whatever can be paid or recovered from restructuring. The second insight that I reached was that, because that raises the question, because if one puts it that way, then you have to say, so what do I do? If I'm a trader, I can trade until who knows how long it takes till this unwinding happens, but I can trade through it or until it. But if you're not a trader, if you're a long-term fundamental investor, then you kind of have to step back and say, like, if I don't know what's going on, if I don't understand these values, then how do I sequester? Basically, how do I get out of the market and preserve my savings or my wealth or whatever until such time as I'm ready to go back and buy again? I mentioned to you before we started, Jesse Livermore was the trader, the famous 1930s trader, who said that it's the sitting that made me all the money, not the trading. It's finding the big idea and just being patient until it fully realizes itself. And so I look for ideas and for something. What I realized is that the only financial asset that was independent from the financial system was physical gold.
Yeah,
we can talk about what about it is interesting. It has a lot of properties that are not particularly interesting in normal times, when financial assets are performing fine and when the property rights are secure, when social structure is secure. it's an asset that doesn't have a tremendous appeal as a financial asset during those periods. But it's a financial asset par excellence in periods when confidence in normal arrangements either drops or disappears or collapses. And that's where gold gains purchasing power while remaining completely independent from the financial system. So if the problem is the financial system, then the backup to that has to be something that's not connected to it. And so that was the second insight. And the third insight was realization that if you want to execute a strategy, if I wanted to execute a strategy like that, I had to figure out how to actually do it in a way that would channel this insight of being independent from the financial system. Like, for example, exchange traded funds provide exposure to the price of gold, but themselves are normal financial instruments like all the others. And so to the extent that there's a problem in the financial system, they would have the same problem, and the claim that you have against them could be taken away from you or changed or whatever, taxed or whatever, without your ability to control anything. So you don't have any optionality. And so the business that I migrated into or switched my credit business into, but was specifically built on the idea as to how to execute the strategy correctly, with all the benefit of hindsight and experience that I have, both coming from the Soviet Union with $100 and getting that in one piece, and then with generally, operating internationally and accessing various sources of liquidity in different places in a legitimate way, without carrying cash in suitcases, kind of thing. That's really my background and what I do and why I do it. And it seems to me like as time goes on, it's becoming more compelling rather than less compelling.
Yeah, that was remarkable. So thank you very much for that. I didn't realize, we had spoken we had a very pleasant conversation yesterday, and you didn't include within that your migration from Russia with $100. That's really remarkable. Congratulations, you did it. So conceptual framework. So last week we were discussing Bitcoin, right? And one of the, Anthony Pompliano, who was kind enough to join us, is an evangelist for it, and he's also a participant, right? So we have to kind of qualify and quantify it like that. And part of his argument, and I think part of the ideological almost argument that surrounds Bitcoin is as a substitute. And part of that is even as a substitute for gold itself, perhaps because of the distribution mechanisms or perhaps even a novelty in the science, which, of course, has some value. And so many people perceive it as a substitute. How do you look at Bitcoin? Do you see that as a substituent or something that can kind of, if one goes up, the other will go up? Because there has been overall within the market, S&P has gone up, gold has gone up, Bitcoin has gone up. So there's been some harmony.
Well, look, I mean, it all depends on what the idea is. I mean, if somebody is saying that the price of Bitcoin is going to go up and therefore you should buy it and it's going to go up because of these reasons, well, it's possible, but I don't know. It makes sense. I mean, intellectually, it makes sense. If the question is whether Bitcoin is like gold, then I would say unambiguously that we do not have an answer to that question. We have ideas. Yeah. People have ideas about it, but ideas are not facts. And so we don't have facts. Bitcoin or cryptocurrencies in general have never been through a systemic crisis. They have never been subject of government sanctions, specifically, pointed government sanctions. They have never, that technology is 10 years old. If we know anything about Moore's law and technology, is that technology evolves. There's really almost no technology that has not evolved. So whether Bitcoin today is the same impregnable Bitcoin 5, 10, 20 years from now, at the level of technology, we don't know. So what we do know, however, is that Bitcoin and all cryptocurrencies and any digital assets in general, they rely on a couple of things. They rely on the networks and they rely on the state of cryptography. So the state of cryptography meaning is that as long as the algorithms that they use have not been quote unquote broken, they, I don't know if you want to call it impregnable, but electronically, at least they are unhackable. And the problem is that the infrastructure around it, they live in the infrastructure, and the infrastructure is hackable. And we've seen tons of thefts from exchanges, wallets, and all kinds of stuff. Gold is proven over millennia. It is required. It doesn't have any network. It can be sitting in your pocket, and you can hand it over to the next guy under the table in a room where nobody else is watching. The transactions are not traceable. See, the other thing is, I mean, this is my sort of Soviet background, but I don't know why it's a good idea. I mean, people think it's a good idea, and for some things it is a good idea, but I don't know for safe haven why is it a good idea that every transaction is immutably and permanently recorded in a database that cannot be erased. So why is that great? So that if at some future point this algorithm is broken because of quantum computing or something else, then every transaction you've ever done can be unwound. It's like a credit card. It's like basically like a encrypted credit card where every transaction you've ever performed with anybody for any reason is in a database. And all it takes is for somebody to get access to that database, and you're counting on the fact that nobody will ever get access to that database. Well, ever is a long time.
Yeah, I think ever really is a long time. It could be. We'll find out.
We'll find out. So is ever 5 years, or is ever 30 years, or 50 years, or 100 years? So I think that's relevant. And so to the extent that people are looking for a trade, I don't have any comment about that. Yeah. To the extent that people are looking for a safe haven that they can have some level of confidence that it works as advertised, I think the conclusions are premature. The thesis is I hear the thesis, but the conclusions are scientific method requires proof. I don't think it's been proof tested. That's all I'm saying.
Yeah, and I'm kind of a Hayekian, maybe a Karl Popperian. So whenever I see science, I'm always looking for that test that's going to disprove it. It's just the anarchist in me.
I mean, it could be. I'm not against it. I'm looking for something sure that's not sure.
Yeah, and I don't want to put you in as an adversary in the Thunderdome against Bitcoin, right? So
I'm not. I own some. I just don't see it the same way.
Yeah. So the way I see Bitcoin, and I can be persuaded one way or the other because clearly things are changing. I mean, the underlying thesis that you guys are expressing. When I say you guys, I don't mean to put you in a position of a gold advocate, or we're discussing your strategy. So I'm just discussing both conceptual frameworks kind of complementing each other. And both of them see kind of a deterioration in the dollar and see competition and see the consequences of a lot of money being printed. And I think both of them would have to forecast a lot of taxes, a lot of more intricacies in wealth preservation, right? Because for the last 50 years, wealth preservation has been you buy your house, you give it to your kids sell it, they turn it into 10 condos and everything is good, right?
Right.
So, but that's certainly changing because the more taxes are introduced into the system, the more wealth extraction. And that also means there's a commensurate amount of hiring that the government does for compliance and enforcement of these things. And eventually they can just make things so complex that it creates a whole new market in itself, which is what we've seen in Europe and in other countries where there's actually a gray market in trading for receipts, for bills of ladings, and for goods that were never delivered. And there just gets to be a new complexity.
Well, you mentioned something there about the dollar. I think there's a tremendous attachment that most people who discuss gold and Bitcoin, and very strong views, by the way, have about the dollar and whether it continues to be the reserve currency and whether it's, the value of the dollar is up and down. I think that's a very complicated discussion that I don't think is very relevant. And the reason it's not very relevant is because when you say that the dollar goes, it's like against what? Like, and the other thing is which dollar? And let me give you an example. So the 1930s, the value of the dollar went through the roof in terms of purchasing power. The government devalued the dollar by 70%. Gold went up by whatever, it revalued gold up by 75%.
Yeah.
The reason gold went up, and the reason gold would have been so valuable, and that's why the government confiscated it, or not confiscated it, nationalized it. I'm sorry, they nationalized it. So they paid you $20 an ounce or whatever, $20 something an ounce, and then they revalued it to $35 an ounce. It's because the dollar that's in the sky was very valuable. The dollar that you had in your bank account was gone. So when people say the dollar, this or that, you need to distinguish between the hypothetical dollar that's somewhere on the screen and actual your money.
Well, I'm a pragmatist. I refer to the dollar that's in my theoretical wallet, because I don't carry a wallet too much anymore. But if I did, I would be referring to that sliver of paper that's in it.
Well, it's easy to redenominate. I mean, there could be look at India. I mean, they just went and canceled 75% of cash in circulation and redenominated it, and that's it.
India
and if you had too much cash, then maybe you couldn't, you lost it, or you had to hire peasants in the countryside to carry, like mules, to carry $1,000 worth to the bank to exchange it, and the cost of that exchange, I'm sure, was tremendous. So my point is that people in the financial markets, we fixate on these very specific things because everybody wants to get a very specific trade, and they want to get it on and they want to win. And what I'm saying is that in the transition that we're facing, it's very, very difficult, probably almost impossible, to pin any kind of trade, and then to execute that trade, and then to get paid if you win. Because if you bought protection, credit default swaps from Lehman Brothers, you didn't get paid.
Yeah.
So you don't buy protection against collapse of Lehman Brothers from Lehman Brothers. You won't get paid. I mean, you may win, but you won't get paid. And so I think that's how I got to gold and physical gold, because nobody needs to pay anything. It's a thing.
Yeah.
It's not anybody's promise to do something if something else happens.
So gold really complements my kind of theory, and I'm by no means one of those people that pound the desk on gold. And usually when people pound a desk on gold, I kind of get up and go anyway, right? So, but it does complement my kind of investment thesis, right? And I've shared it with a lot of people, and the world is a changing place. We're seeing the world kind of claved, and we're seeing the world in a way that's really changing. Countries are having to pick allies. We've seen that with Israel. We've seen that with United Arab Emirates. Everyone's having to pick their ally, which they've never really had to do before, because America's always been so dominant. And at the same time, we're not seeing necessarily such a rise of China as we're seeing kind of a collapse almost of some of the other countries. So China's really filling up that vacuum. And they're doing it very efficiently. They're making a lot of errors. And you make such a good point when you say the dollar compared to what. I am not a person who expects there to be deterioration in the dollar. Now, you can measure that in a whole bunch of different ways, but I certainly don't see the dollar ever losing its status. Because as you said, to what? And the dollar is in every trade bank. It's in every bank around the world. We've had a deficit for the last 15, 20 years. And one consequence of that is it puts a lot of those dollars in banks all over the world, right? So while as China has a surplus, there is no one renminbi trading anywhere, right? It's whenever they decide they want to put it out there. And because they've got the dual currency, which I have discussed somewhat on Twitter, and it's a part of my own kind of analysis, what's going on there, and also all thanks to a friend who goes by the name of Deep Throat IPO on Twitter, who actually really did the forensics on it. So I see the world being bifurcated, and that's what we discussed with Valina, right? The entire world is just absolutely changing. Alliances are changing. Supply chains are changing. The trade routes are changing. The rush to develop third world countries and to electrify them and to energize them is now, there's a real urgency in it. because everybody needs those trading partners. Everybody needs kind of those marine passageways. And, we're just seeing a lot of activity. There's a lot of volatility, political, and perhaps I expect, military volatility. I do expect there to be disturbances along the South China Sea. So another part of that is we're going to see wars, but I'll leave that out for an upcoming type of thing. But another part of that also is that we're seeing a defragmentation of the world. And we're watching it very quickly here, right? Because we can see it, it's tangible, and it's something I've discussed for quite some time, but now it's people are recognizing it a lot more because it's becoming something that you can observe. Before, you were locked in your house, so you didn't really get a chance to leave and see how the environment was changing. And now that people are leaving, they're seeing, that corner deli's out of business, and instead it's an Uber Eats or, supplying it or however it works. Everything is an Amazon kindergarten. So we're seeing a defragmentation of the world, and the world is really being cartelized, and particularly the West very quickly is being cartelized. So my thesis has been in investments within equities is to buy the cartels, right? I want to, if the world is being rolled up, particularly within the West, I want to buy the roller uppers. But then one part of the of what happens next, I think, is you are going to see a lot of disequilibrium in wealth, which Americans have not seen. And there's going to be real wealth, which has hard assets. And then there's going to be kind of a fractional wealth, something that it can have the appearance of wealth because it can have kind of the garish Rolls Royce painted red or whatever, but you're just paying for that by the hour. And that's just kind of going to be the way people live. And so there's going to be this kind of fragmented wealth. And then there's going to be real wealth. So, part of the series is, if you can, if you have a sense of futurism and you can see kind of a sense of what the future is, you have to make sure you don't suffer it, right? So I want to have the hard assets. I want to have real estate. I want to have Tier A residential real estate because people are always going to need a place to live. I continue to hold my stocks, but gold is also complements that thesis because that's a hard asset. So if I had to divide up what's real money and what's not, and what is the wealth that I want to possess, it's the hard assets. And I expect others are not going to be able to hold on, are not going to have the opportunity or even the wealth to acquire gold, to acquire real estate. So I kind of think of it as rich people's money and poor people's money, right? I see Bitcoin kind of serviceable as a kind of substituent for poor people's money, right? It's a type of script note. Google can just print it out and issue it out as a script note, and you can spend it at the company store or at the company Google store. While as gold, the appeal for me is that it's got no memory. So it's got everything that you described about Bitcoin. It doesn't have that, right? It does. You can just bury it in your backyard.
No, I mean, you're right. I mean, the key word here is independence. It's independent. So when something is independent, it's completely independent. I mean, people who profess sort of American law or freedom and independence and all that. I mean, for some reason, when it comes to their financial affairs, they don't realize how dependent they are on brokerage houses, on the systems, on the internet working, on the digital record keeping, on the cybersecurity, on all kinds of things. Whereas gold, it's independent. It's genuinely scarce. It cannot be replicated. People have tried. It cannot be replicated beyond the amount that exists there. I mean, mining inflation is probably 1 and 1.5% a year. And it's lasting. I mean, it's lasted. All the gold ever mined still exists. I mean, everybody knows these facts, but it's the applying these facts. Now, I'm not pitching gold.
Oh, I understand.
To me, it's an answer to it. It's an answer to the question, and most people don't have the question. So if you don't ask the question, you don't care about the answer. So it answers the question that most people haven't asked themselves. And that's the value of the option here, is that if one has a macro, or I don't know, it's not a macro view, systemic view as to the financial positioning or the balance sheet that we're operating with, and how throughout history these types of excessive balance sheets have ended up, what sort of reorganizations have followed that, both in the political and social sphere, geopolitical sphere, in addition to financial sphere. Then you have a question. So, well, gee, I mean, if that really happens, but that's what insurance is about. I mean, you don't buy insurance because you know your house is going to burn down. I mean, you buy it because there's a non-trivial chance. And if you're in California, there's a more than non-trivial chance that it might. And so, of course, maybe you don't buy it, maybe you get away with it. I don't know. But if you don't get away with it, you can't afford the loss. So, you know, if you have answered the question, maybe you can afford any outcome. If you haven't asked the question, you can only afford the kind of outcome that you have in your head. And if it's something other than that, plan B, you don't have a plan B. Well, that's too bad. That kind of happens to the majority of the people anyway. I mean, most of the time. And that's kind of the value of thinking out of the box and doing something about it, whether or not it, whether or not it pays off in a very big way or in some moderate way. That's kind of the thinking that I have about it.
So can gold, given, your description of it, which I can't really argue with, right? I mean, David Stockman has a very bearish case, and I've never argued with it because fundamentally he's really right. Fundamentally, like, you can only make a house of cards so high, and we've achieved to make it really high. Right? It is really high, but at the same time, I don't see a reason why it can't get a couple of stories higher, right? So
nobody ever sees the reason, Adam. That's the point.
Yeah.
I mean, I was in the Soviet Union with my wife, who's American, and we went back after 10 years. I left. It was in 1988. Things were economically pretty bad there. But if you think that I or she or any of my high school friends whom we met there had any idea, or not even like,
really, when you were in Russia, you did not. When you were in the USSR, you did not have a sense of kind of
that the collapse was imminent. No, we had a sense that the collapse was inevitable when we left in '78. But inevitable and imminent isn't the same thing. We just didn't know when. We just said it's just the system doesn't work. It's corrupt. It's unsound financially. It's unsound economically. There's stagnation going on. There's just no prospects here, and there's major political risks of further repressions and inside until we left. And then when I went back 10 years ago, 10 years later, it still hasn't collapsed. And Gorbachev was trying to reform it. It's like trying to move cards in a house of cards. I mean, you don't want to move cards. You start moving cards, you bring down the house. So no, there was no inkling. And so that's very important to understand. It's like people say, well, it's not going to happen yet. You're going to feel that way right up until the moment it happens.
Really? That's the way it happens?
Yes. Yes.
Yeah.
Yes.
Yeah. Yes. I can understand that.
That's saying, I'll explain to you. I mean, or I'll give you an example. That saying, there are no atheists in foxholes.
No.
That's a very interesting saying because
I didn't
never heard it.
It sounds good.
There are no atheists in foxholes, meaning that when faced with immediate existential threat, everyone, even atheists, are willing to contemplate some higher power that maybe can bail them out of the situation. Now, they don't say there are no atheists at war or there are no because in the foxhole, it's an immediate, like, bomb bursting in air, rockets red flare, bomb bursting in air, and bullets flying overhead. I mean, you are in the immediate existential threat. So imagine a situation where the front lines who are in that type of a situation, for the duration of a war, every time a bullet flies or 5 bullets fly, the country for which they're in the army scrambles the entire Air Force and deploys it on that section of the front. And so beyond 2 bullets, they never get anything. They start walking around, they stop bending down, they start smoking cigarettes at night, which attracts snipers. They start engaging in unsafe behavior because they become accustomed to the fact that the big Air Force behind them is going to come and shoo away the enemy. I mean, that's financial markets for the past 40 years. Yeah, every time it starts, the Air Force shows up, with the Space Force and everybody in tow, and they beat back the situation, and people get used to it. And what if all of a sudden it turns out that there are multiple fronts and the entire Air Force cannot come? I mean, then what? I mean, that's what I'm talking. That's what I'm talking.
That's awesome because I see the foxholes, right? I can see where they are, but they're still far away from me.
We're
And
not,
I'm not being chased. I'm glad to know that they're there, right? And I can dive into them, but I'm really not under threat of being chased, you know? So I see that.
or so we feel, or so we feel.
This is true. This is really true. But, you know, I see the markets, and I've been a bull for 30 years. I've been a raging bull for 30 years. So, you know, I remember when I came into the markets in 1987, and maybe that was the dawn of the gold bug era. I don't know, but that's when I was hearing a lot about it from 87 to 92. Is I came in 2 months before the markets crashed, and part of my success, I think, had to do with the fact of attrition. Right? I waved goodbye to everybody, and you know, things work out good. And I had a high pain tolerance, but I saw that I saw that the economy was strong, that people were still buying things, that people were still selling things, that there was still a marketplace, that commerce activity was still happening. In fact, it was increasing, right? The volume and velocity was increasing. Yeah. So, you know, I've seen that, you know, we've seen that trend going on for 30 years now, pretty much uninterrupted, right? So most people today have not beheld a very sustained, extended recession. Right? They understand it because they've read about it in the history books, and maybe they feel that they have. But 2001 was not that. We both know that. 2008 was very brief. It might have been. It might have just been kind of asymmetrical and painful, but it was very brief, right? And it was a very kind of quick resumption of the markets. So I certainly do remember 87 in that period where there was a lot of uncertainty, right? And that's what created a lot of the operating theories that have been continuing within financial markets and the philosophies of it, of the market equilibrium, that eventually it all works out. And then what happened at that time in 1987, the market equilibrium, is everything worked out. And pricing was perfect. And when pricing was perfect, everything tanked because of it. But I'm not a market equilibrium guy. I'm the exact opposite. I'm a market disequilibrium guy because I see a trend, right? Just as I saw with Tesla, right? And, you know, I had to endure a lot of it. But I saw a trend that's been going on for many years. And my theory is also the defragmentation of the world, the cartelization of the world, and that the auto companies could not compete, right? They couldn't do fast cycles of innovation. So I see a trend. And if there's a trend, there's usually going to be somewhat of a misconception of that trend, right? So I can see the trend within the markets continuing to rise. And also, when you're printing up a lot of money, that money has to find a home someplace. And our markets do have a lot of liquidity. There's a lot of transparency. There's a lot of reporting. Everybody in the world loves our markets. We've got regulators. We've got real oversight. People can actually go to jail within our markets if there's fraud. There, you know, our quarterlies, and there's really interrogators on those analyst calls because I've been on both sides of those.
People go to jail. Nobody went to jail after 2008. I was in mortgages and derivatives.
Yeah, I know. Well, Tyco.
You know, mistakes have been made. Criminal mistakes have been made.
Yeah, I agree. And that's a conversation I've had on other Periscopes because I do think that created some real problems within the fabric, right? That people are losing confidence. And part of your argument can certainly be if people are losing confidence in kind of this, it's going to spread. It's going to metastasize into losing confidence in the financial systems as well.
You're describing what? You're describing the bull market. You're describing the what. What you're describing less is the how. And part of the how is not just the globalization and the other things you were describing, positive things. It's also the massive subsidy that started being given to consumption in the form of debt.
Yeah.
I mean, it's an economy that lives on supply and demand. And if demand is continuously and significantly subsidized by new money that comes out of nowhere that hasn't been earned, it's essentially what you're doing is you keep pulling demand from the future into the present. And you continue doing it, and we've been doing it for 30 years. But there comes a moment when you cannot grow the debt. I mean, we have destroyed essentially the capitalist system because zero cost of money. This is the Soviet Union in this sense. I mean, one of the key problems there was massive misallocation of resources, because the resources were being allocated by fiat, by the government, as opposed to by entrepreneurs. So here you have a different dynamic. It's not the government that's allocating resources, but the government sets the price of money. And when the price of money is set at zero, there are a lot of, or at 2% or 1%. I mean, a lot of projects look good, which are not feasible normally and have never been feasible. And the low cost of money promotes speculation and promotes short-term projects as opposed to long-term investment. So you're sitting basically eating at your own dung.
Is that another saying? I never heard that saying either.
Well, you're eating seed corn. Okay.
Yeah, yeah.
You're living large on your seed corn, which is your capital. You're destroying your capital base. We
are, and I can see that. But again, the world is not a static place, and America does not exist kind of on its own island, right? China is doing the same thing, right? And they've been purchasing gold, they've been hoarding gold, but they've been printing out money quicker than we have, and without having to back it with anything but more. So they have been hoarding gold. I mean, we've been seeing that.
Let me make a point about gold, which I think is very important. There are a lot of assets that are immune to what we're talking about to some extent. I mean, a lot of real assets. What makes gold different is the fact that it's the only financial asset that's independent. What does it mean that it's financial asset? It means it's liquid. Like property is not liquid. Rolls Royces are not liquid. Da Vinci's are not liquid. Yes, it's a multi-generational wealth preservation, and eventually they will come, they're Noah's Ark. They will travel to the other side, but the paintings by Da Vinci and Rembrandt and the old masters, impressionists. But these are pro-cyclical assets in the sense that they're prices. They're permanent assets, but they're pro-cyclical in terms of their liquidity and in terms of their prices. Gold is counter-cyclical in terms of its demand for it, its value, and its liquidity. That's what's interesting about gold. There are many different ways you can solve this problem. You don't need to put all your money in gold. There are many, many different, like you said, high-quality real estate. New York is going down. Well, guess what?
No, New York is going to rise. You know that. I've been before. There's a lot of mispricing that's going on in New York, and there's a lot of reaction what's going on in New York.
Quality properties in desirable locations will have value. I mean, they'll have less value, more value, but on a relative purchasing power basis, they will preserve significant value. Whereas financial claims may be extinguished for nothing or for pennies on the dollar. And you don't have any control to that. You can't hold the title. When Chrysler decides to go bankrupt and reorganize itself, it's the new shareholders of Chrysler that get the company. The old shareholders go away. I mean, that's how it works. So that's what we're talking about. It's really control over real assets, various kinds of real assets, your own business. But gold simply is the financial, it's the way to store liquid wealth in an independent, isolated place, as opposed to just hold wealth, period. I think it's important to say that there are many other solutions. In addition to gold, it's just a particular solution of a specific kind for liquidity, for the opportunity to deploy this money when other people don't have the money or don't have access to liquidity. That's when the value of optionality and liquidity is very high. And that's the interesting thing about gold versus other assets, real assets. But it's not the only one.
That's really interesting. And I want to get to some questions, but I've got one more question, and I see other people's, and their questions are better than mine. So, yeah. So, but we've seen gold kind of rise with the markets. So they're not, normally they would kind of be counter, wouldn't they?
No. See, that's very important. Gold, people try to trade gold as if it's a commodity. Or as if gold is a very unique asset in many ways. It's not a commodity because it's produced not to be used. It's produced to be owned, to be hoarded, right? So it has a very different supply and demand dynamic. The regime of different supply demand. So, for example, half of all the gold goes into jewelry. So clearly that's pro-cyclical. procyclical both in the emerging markets. It's procyclical in the Western markets. In the emerging markets, a lot of jewelry is used as savings. So when I forget, Fred Holmes, I think he calls it the love trade. This is basically when people in the emerging markets, India specifically and China, are doing well and have a lot of money, they're buying gold jewelry as a form of savings, setting money aside. Okay, so demand of that kind. When there's hints of inflation, the traders trade gold in the form of futures or ETFs or whatever. There's a whole trading thing. They use charts.
If the whole world is going to be so, India, I've observed, pretty meticulously. I've watched their demonetization because it was so interesting, and it's really interesting.
Election night 2016, it happened.
Yeah, and it was
election night 2016.
In many ways, it was so failed, and I want to get to the questions, but gold as kind of that store of value also has its vulnerability, doesn't it? If the price of gold goes down, because the intrinsic value of it being jewelry and being kind of computer equipment, and when it becomes cheaper than a substitute parts, it just makes more sense to use the gold and everything else, and the desire for jewelry. So, but wouldn't people be buying less jewelry if the whole kind of world gets
yeah, well, they will be. But what substitutes that demand is Western demand, which is Western safe haven demand, which is very low relative to what it could be or to its potential. It's almost nothing relative to its potential. I mean, look at the exposure of institutions and pension funds, and they're starting, but it's not an asset class. It's not something that everybody owns as a reserve, or like Americans own, or people in the West is generally used to own. And people used to own it before 1950s or before gold kind of went out of the daily financial system. They don't, because they have high confidence. So what I'm saying is that looking at gold prices move tick for tack, you have to think of like insurance. Insurance trades all the time. But when the hurricane shows up, it's a whole different supply-demand equation. Because all of a sudden, people who didn't think they were in the path of the hurricane, they find that they are, and they're willing to pay anything, because now they see that they're going to lose everything. Now, the other thing you said about the price of gold, gold does not have one risk that every other financial asset has, and that is the risk of permanent impairment. And that's very important to understand. Permanent impairment is when a loss is irretrievable and cannot be reversed. So when a company goes through a bankruptcy, the pre-existing claims are irretrievably impaired. They will never go back. They can never come back. Gold, I mean, it's a dumb piece of metal. I mean, nothing happens to it. You can still leave it to your children. Gold ounce today buys pretty much what it bought in Roman times and these times and those times. It's true. Honestly, it's true.
You can bury it in the backyard. You can bury it in the backyard and give your kids like a treasure map, right?
I wouldn't do that because
it's difficult for them.
Because people die and then they don't know where the gold is, and that's why they find golden treasures periodically.
That's what makes it exciting, though. That's what makes it exciting. So I see some questions here, and I want to have a chance to say hello to everybody. So
maybe we can answer some questions.
Yeah. So thank you so much for being here, Guy Mishmish, and I see Kevin is here, so thank you. Namaste to you as well, and Ananda's here as well. So thank you, Hare Krishna. So thank you so much for being here. And Guy Mishmish asked an interesting question, and I want to find it. He says, here we go. And his first part of the question was about buying gold, and then the second part of it, which is this, is how does a person, get gold exposure? So what are the different vehicles that you've seen that can also kind of hedge it, other than having even if you have a physical inventory, what's the best way of kind of leveraging it as well?
Well, I mean, it depends on the purpose, on the objectives. I mean, one is speculating. I don't mean it in a negative sense.
No.
The price. Well, you can use, there are tons of options. I mean, you can use futures, you can use options on GLD, you can use GLD, you can use other ETFs, you can leverage them, you can margin them. You can do absolutely anything. You can do mining stocks, you can do leveraged mining stocks, you can do junior mining stocks. I mean, there's a plethora, however you pronounce this correctly.
Everybody knows. Everybody knows.
There are tons of opportunity. There are tons of opportunities, and as long as everything is fine, they're all fine.
Yeah, yeah.
Physical gold is for it does all that without leverage, and it works when things are not fine. And so, if one thinks that there's a non-trivial chance of things being not fine, then one does physical. But yeah, I mean, just speculate. I mean, trading, tons of way to do it.
Yeah, and it's interesting, and I want to get to that question, but let me hide this for now. How do I do that? Oh, that one. I want to get to a question, but I also want to kind of clarify my own position because I do think it's interesting. I think bubbles can exist on top of bubbles, can exist on top of bubbles, right? So I think ultimately, you can stack up a lot of cards, and I'm willing to bet that the cards can just keep on getting higher. However, within the cartels, because I think outside the cartels it's not, and I also think the wealth distribution is really going to narrow. I mean, just completely narrow because fewer people are going to be able to buy into stocks, can afford to buy into stocks. Fewer people are going to get stocks as part of a 401k or retirement plan. Fewer people are going to get company stocks because they're not going to be employees. So there's really not going to be that need to attract and retain key employees because a lot of them are going to be 1099. So we are in a changing world.
Are you not worried that brings political change?
It's going to bring. I've said it. There's going to be a lot. I firmly believe there's going to be a lot of sector rotations. I believe there's going to be a lot of political changes. But I have to look at America versus every other country because if America goes down this, but the other countries go down that, then I'm pretty happy with that, right? I mean, it's the best. It's the best we can.
I don't know why you say that. America went through the Great Depression, where here's a statistic in the Hamptons. There was I looked it up many years ago. There was I forgot what it was called. I think a Blue Book. It had like 400 good families. 400 is not from Forbes 400. It was just like several hundred. Good families listed their phone numbers. This is in the 1920s, late 20s. By the late 1930s, 75% of the people listed before the Great Depression were no longer listed. The world didn't end. The United States came back stronger than ever, but individuals, families, lost everything. I mean, this is what's important. Let's not confuse Armageddon for the country and for its future with specific financial fortunes of people who today have money or think they have money. That is not the same thing. Soviet Union, you and I talked about, we went on. The Soviet Union collapsed. Most people lost. Some people made a lot. But Russia is not gone. It's very effective on the geopolitical arena. The country it's still a very large country. They're not done, but the elites of the Soviet Union were done during that transition.
Yeah,
and the pensioners too, by the way. That was tragic. Older people. I mean, mortality for males dropped to 57 during that time. It dropped to 57. Average, yeah.
Wow.
Average age of a man dropped to 57. It's back into the 70s now. Wow. It was in the 70s in the Soviet Union, and because particularly men of middle age who couldn't provide for their families. I mean, there were heart attacks, there was drinking, there was all kinds of stuff. Like we're seeing the what is it, Vicodin, whatever people keep overdosing on. Prescription drug epidemic deaths. I mean, this speaks to this crisis that I'm talking about. That may not be apparent to every single person in every single situation, but it happened. And so it happened in the United States. It absolutely has happened. It just hasn't happened in our lifetime.
Okay, I'm going to try and rip through some questions because there's so many, and I have a lot, but everyone's questions are more. And Ivan Valentina, so thank you so much for being here, says, respect how Simon is skeptical yet owns Bitcoin. And I agree with that. That's pretty awesome.
I own it as an option. I mean, I don't own a lot of it, but it's just I feel it may be a good speculation. I'm not saying it isn't. But I don't own it as a safe haven. I don't put a big chunk of my money into it because I think I'm going to make a fortune.
And somebody has a question about that a little bit later on, so I'm very interested. Want to make sure I get through a lot of them. So these are kind of like speed rounds, but at the same time, there's so many I have to scroll through so that they kind of work sequentially.
Sure.
So L Wolf 303. And before we respond to this, I'm going to need to put in a little bit of a disclaimer here. Sorry for joining late. Question: how much further can gold go over the next 12 months? So I do want to put that disclaimer that this is not a brokerage, right? We're really not discussing that. So we're kind of giving everything a conceptual framework, and hopefully this is something that you'll have kind of that internal discourse, and then one with your professional. And I've always been, even though I've got analysts, I've always been very intuitive in these type of things. So I've only used my analysts to prove me right, because that's usually what happens, and I've been wrong as many times too. So,
well, I can answer the question. I don't have any idea.
Yeah,
I really don't know. I mean, I think that the way to think about gold is, because it's a supply demand. It's a supply. The product. I'm sorry. The gold price is a product of supply and demand. Okay. So the question is, where does the supply come from? Where does the demand come from? And what creates smaller supply versus higher demand? And we can discuss it, but it's not a trading idea. It's a macro. I mean, it's a bigger idea. And so I think over time, relative purchasing power of gold will go up significantly from here. But 12 months or 24 months, or how it happens, or what the numbers, and the numbers don't make any difference, because we don't know, is there inflation? Is there deflation? Is there maybe gold at $600 an ounce buys 6 times more than it buys today? I mean, it depends on what the dollar is worth and what the dollar buys. In financial assets and property, in restaurant meals, I mean, we don't know. So I think we shouldn't attach ourselves to nominal prices.
Yeah, very interesting point. Very interesting point. I do somewhat, right? But I completely understand that you make such a valid point, and it's one I should really think about a little bit more, because again, my thesis has just been, I don't want to have the poor people's money. I want to have the currency that's a lot more durable. I'm sorry?
It is that.
I know it is. And, Anthony Pompliano has just spoke so articulately and elegantly about Bitcoin, and I'm undecided on it, but there's definitely some value there. It just hasn't been, there's not enough of a price history, and there's not enough management yet of the boom bust cycles that the regulators are going to have to come in and do at a certain point. And I'm not sure how the regulators, being that the market participants are operating on such imperfect information, I'm not sure how regulators will be anything but also operating on imperfect information. So I'd like to see a little bit of that resolved first. So I certainly appreciate people getting in before it's resolved. It's just not my particular appetite. So Ole Pet, thank you so much for being here. Says U.S. government can demand payment in dollars. As long as survives, people need to buy dollars to pay their taxes.
So what?
Well, he makes the valid argument that a lot of economic historians in particular make, right? And it's the Austrian school is that you can't pay your taxes with it. And
with what? With gold? Or with Bitcoin?
No, they're referring to the gold value and dollar. Specifically.
I mean, so what? So gold price used to be $20 an ounce, and now it's $2,000 an ounce almost. So what? How does that change anything? Still pay your taxes in dollars. You just sell less gold to pay the same taxes. That's all.
Yeah.
Gold is negotiable. That's the thing. It's one of the most negotiable instruments in the world. So you sell, you exchange. It's like storing savings in a foreign exchange account where you exchange back into dollars however much you need whenever you need it. That's all.
Yeah, well, I want to continue with that person's question, because actually I only looked at half of I saw the whole question, but I didn't give you the whole question. I only gave you the half of it. And the continuation of that question was, what if the U.S. demanded taxes to be paid in gold? Wouldn't gold become more like the U.S. dollar?
Well, that used to be the case. Payment. You mean they demand payment physically in gold, so then people have to go and buy gold to pay their taxes. Unless he's talking about going on a gold standard of some sort. Well, that's where we were up until.
I'm not sure. There is definitely a lot of people who can kind of foresee a return to a gold standard, and they look at China as being, perhaps an exhibit A of that. Do you have any opinion on the China, on their hoarding of gold, and does that lead them to something that's a little bit more asset backed for their currency?
Well, I have a view of that. Russia is also hoarding gold. I'm not sure that they're hoarding gold for the nefarious, what's the word? For the nefarious reasons to unseat the US dollar. Let's put it this way. But it's clear that the United States has used the status of the dollar and global status of the dollar to exert jurisdiction over pretty much all financial transactions around the world that involve the dollars. So basically, the United States has said a number of years ago that as long as you're transacting in dollars, let's use a specific example instead of being opaque. So BNP Paribas is a French bank, very large French bank, that traded with Iran, or facilitated trades with Iran, that got slapped by $5 billion fine by the United States. And the French initially said, like, excuse me, like, we can trade with whomever you want. To which the United States said, you use the dollars. The dollars cleared through the Federal Reserve System. You violated U.S. law. You got to pay $5 billion if you want to operate through SWIFT and through other global financial networks, which the United States controls. So the United States has essentially weaponized the dollar as right? And against citizens as well, because American citizens now can't open foreign bank accounts because of the compliance requirements. That's another reason for gold, by the way. So it's become very difficult. It's become very restrictive and difficult. You can say that American citizens and Western citizens are losing privacy and losing their ability to move the money around the world. It's become very difficult to operate internationally. And so people like, or countries like China and and Russia, that are subject to sanctions, that are engaged in some sort of a hybrid warfare with the United States, it is natural for them to establish reserves that are independent and can be used to pay and to transact and to operate without relying on the financial networks that the United States controls. It's like building your own highway, so you don't have to go down the highway of a person who can stop your car and take your cargo. I mean, it's very simple. So aside from any conspiracy theories about geopolitical use of leverage or whatever, it's the reason they use gold is the reason I think people with savings should have physical gold. It's independence. They want independence. They want room to maneuver without reliance on frameworks and institutions and pathways that are controlled by somebody who's potentially adversarial, or not even potentially. That to me is a very clear, very very sensible thing. And okay, maybe they think that they can use that as leverage against the dollar and in some big geopolitical gambit, maybe. But in the meantime, that's just a clear reason, and it makes perfect sense to me anyway.
Yeah. And I want to be responsive, but I want to understand this question better. How likely does Simon see the need for secret transactions via gold or otherwise?
I mean, it's a self-fulfilling. If this happens, then that happens.
Yeah.
That's why you have insurance. If this happens, then that happens. You don't have insurance. Nobody sits at the end of the year with the wife and say, sweetheart, we blew another $3,000 on property insurance, or whatever the number is. And what are we insuring this car? We didn't get anything for it. Let's just get rid of it. Nobody even thinks to think like that, right? But when it comes to gold, it's like, when is my payoff? When is my payoff? I want to make money. It's in some ways, it's insurance. Insurance pays when something happens. Nothing has yet happened. I mean, obviously, people perceive the possibility of it happening more today than they did before. So price of gold, demand for gold, that is up. And supply relative, marginal demand is up, marginal supply is down. That's what drives down the price. That's what drives up the price. But nothing has happened yet, or it hasn't become obvious because, again, I don't see American investors piling into gold, or physical gold for sure they're not. So I don't particularly see anything happening to warrant much higher prices at this point.
There's so many questions, and I'm going to try and get through them because we've gone for an hour, and I usually promise everyone it's going to be an hour. So it's going to be a few minutes more, but we're going to crank through everything. So I just want to comment on Ivan Valentino's, and thank you for being here, on the comment, and I'll just respond to it, and then we can get on to another one because it's an interesting point, is that the portability and fungibility of gold sucks. Well, that's completely true. And I'll definitely let Simon, or I'm saying that's true. I'll definitely let Simon, respond to that. But if it's a negotiation against Bitcoin, that's definitely true. Is really what I meant to say, because I think that gold's a much better store of value. But I definitely recognize that that Bitcoin has kind of a condensed value. I think Bitcoin is a bad store of value, but I think it's got a great condensed store of value. Whereas I think gold is just a more durable store of value. So
let me ask you: fungibility of gold doesn't suck; it's 100% fungible. Portability is not great, is not good, but there's a benefit from that. I mean, the conveniences of Bitcoin have the flip side of its reliance on the cyber networks, robust cyber networks, access to cyber networks. And I know people think like it's a given, but it isn't a given. In a very dramatic situation, it's not a given. I mean, even in a natural disaster, it's not a given. Whereas gold is truly independent from that. So yes, it's inconvenient, but it's also then harder to find, maybe for you, but also for others who are looking, harder to repossess, harder to track, harder to a lot of different things. Portable physical goods are very, very difficult. They're inconvenient, but they're inconvenient both for people who use them and for people who try to take them. So
that was a really good response. That was so helpful to me. So thank you very much. I think your screen might be frozen. So, but we can still hear you if you're still with us. So
yeah, no, I'm sorry.
Okay. Yeah, no problem. So we caught you at a good pose though. So it was fantastic. You'll like it on the replay. So you're right. Thank you so much. I was very thoughtful. I was wrong. I stand corrected because I looked at one part of that and not the kind of completeness of what they were saying. So I looked at the portability and didn't distinguish it much from what they were saying about the fungibility, and I really should have. So yeah, the portability, as I have a physical inventory of metals, I would say that that is a problem, right? And carrying costs for metals can be expensive, especially for nickel and some of the other ones. You just make such a good point that if this happens, then that happens, and you really a strong point. I certainly I didn't consider that, so that was really helpful. I should write that down, but I'll write it down later. So I see that Mark is here. Mark Schneider, who is who did a cast with us 2 weeks ago, truly a nuclear expert, and was so helpful and so thoughtful with his guidance. And he says long-term investor makes money on bull markets and bear markets. And as an investor, I can say it depends. You just want to get outsized returns, and it's just we're not sure outsized against what. And I think that in turbulent markets, and where you're going to see a lot of sector rotation, I think there is going to be some scarcity of investment opportunities, and that might mean people are all flocking to different, to just a few different safe havens. And certainly one of them can certainly be gold, right? Simon, are you still there? Because we've got you in a good pose. Okay, so Simon broke up a little bit, so I'm going to look for the next question. And then again, Simon, on the replay, when you see this, you'll see is we caught you at a good time. The Broke Pencil, thank you so much for being here, says, speaking of trends, everything is going, oh, you're back, Simons. Thank you so much.
A very good example. I mean, I'm not in the middle of nowhere, but Wi-Fi sometimes, has issues.
Yeah, you make a really good point. So Kevin, and thank you again for being here. Does PE public traded level scrutiny give us a blind spot? I'm not really sure what they mean by that, Kevin, but I don't really pay too much attention to price earnings multiples. I never really have, other than using them kind of as a yardstick to how much I'm going to give a premium to a good management team versus a bad management team. Simon, do you have any thoughts on that?
No, because it determines by supply demand. I mean, when a washing, I have used that example many times. When a washing machine doubles in price, the same washing machine, we call it inflation. When a company doubles in price because PE, it's called multiple expansion. If nothing changed, then now you're paying double for the same. That's inflation. It means your capital dollar is buying less corporate equity. That's
So,
what it is.
so does No Nine says, how does the current U.S. situation compare with Japan's lost decade? I don't know if I can adequately respond to that because it's a little bit out of my my competency.
I think it's totally different situation. Japanese is a high savings nation, highly disciplined, taking care of their old, living in much more contained condition than the U.S., borrowing internally, a high exporting nation, and has been going through that trouble while the rest of the world was chugging on all cylinders. So an exporter that's having lost multiple decades while everybody else is doing great. The United States is not a big manufacturing nation and is having difficulties while everybody else is also having difficulty. I mean, I think it's a different situation and not a net saver internally and not a disciplined, homogeneous population either. So there are a lot of different factors. I wouldn't compare the two.
Yeah, very interesting. So Janan Glasgow, and thank you so much for being here, says gold can also be stolen. Can you address the security issue, please?
Absolutely. Well, one of the reasons I do what I do is because of that. Because when you can dig it in the backyard, but when you talk about it online like you do now, some people may be inclined to pay a visit and to ask where it is. Gold can be stolen, but in fact, if it's stored properly in remote, there's a whole logistics infrastructure of storing gold. Gold is very difficult to steal. It's much more difficult to steal than cyber assets. I'm not talking about cyber currency, cryptocurrencies. I'm talking about all digital assets. That's why you don't see a lot of robberies. I mean, to steal gold is very heavy, 20 times heavier than water. You can't carry away a lot on yourself. So it's like industrial style heist with, forklifts and heavy axle trucks and smelting facilities. I mean,
but in your scenario, in one kind of, you had described that there could be a future in which gold is traded kind of in the gray market and is used kind of as that currency. And I picture that, but so can't I also kind of picture that where that extraordinary effort to kind of capture somebody else's gold also becomes that part of the future? I mean, if I can envision one part of the future where gold is now traded in the gray market as kind of as a substitute for a real American dollar, right?
How is that different from robbing cash today or yesterday or at all times? It's just another form of value. I mean, there are robberies all the time. Let me delineate a couple of things here. We're talking about gold that's in your pocket for immediate transactions. It's some limited amount. I mean, $50,000, $60,000. I mean, it's not a tiny amount of money, but in terms of gold coins, it doesn't take much room and it's not a big thing. If we're talking about wealth preservation, we're talking hundreds of thousands of dollars. Then there are facilities for that. Just like you store your cash in a bank, you store your cash in those facilities. Those facilities don't have anything to do with financial system. They're commercial, industrial vaults. And there are companies whose business it is to store it under armed guards. So to go and rob those facilities, I mean, you can get killed. First of all, you can get killed, and it's not that easy to take it away. And then to move it out of the country in which it's located, if it's in Switzerland or in some other place, I mean, you have to cross borders. There's no stick where you can put $1 million and abscond with it. I mean, you cannot do it from Romania, sitting, on your bed in your underwear with a laptop, stealing money from all over the world. You got to show up. You got to show up with guns and trucks, and that hasn't happened in a very long time because it's so much more dangerous and it's so much less juicy than stealing digital assets. Phishing or millions of dollars are stolen through phishing and other forms of fraud. This is not fraud. This is like this bank robberies. I mean, dangerous.
we're going into a speed round though, and now
Okay, done.
this is a speedier round. So Hans 553, thank you so much for being here, and I agree with what they say. So they say, Adam, you're focused on my focus on the price is completely different.
I don't think you're focused on the price.
They were saying my focus on the price.
I didn't hear you focused on the price, but okay.
I did because I was using it as kind of a substitute for, and I don't think I precisely did, so I'm responding to them directionally, right?
Okay.
So I did, suggest that it is kind of on par with the market, and so I can certainly see somebody saying that I would think of it as a substitute, perhaps, for the market.
Like I said, over time, gold price is not correlated to stocks. Sometimes it goes up with the stocks. Sometimes it goes counter-cyclical to the stocks. It's very situational. And to understand, again, this we could talk for an hour. Gold price formation and what drives prices and why models. It's very hard to model. It's almost impossible to model gold prices. People use a different matrix. I don't believe in any of that. And I think there's some coincident indicators that it happens to go up. But whether that's leading indicator or explanatory in any way, I don't think there's any work on that that's been done. The only thing we know is that running regressions over time, the correlation to stocks is extremely low, which means sometimes it goes in the same direction, sometimes it goes in the opposite direction, but it's not predictable. I mean, it's not consistently predictable. That's the point. Yeah.
So now Hans 553 is commenting they didn't confiscate it. They made it illegal to own. Yeah, I love the history that went back into the kind of the nationalization of gold under FDR, and also the default on the bonds he did. So I thought that was pretty interesting.
You know what? They do they mean governments. They do it at the moment of highest desperation. If somebody took that $20, whatever it was an ounce, that was given to them in 1934 and put it in stocks or property, go buy an office building in New York. Boy, would you have done a lot better than having gold revalue 70%. You would have done a lot better. That it's almost like a favor. They forced people out of something that preserved purchasing power but didn't enhance it. And you could have gone into things. I mean, you could have bought almost anything in 1934. You would have made a fortune. I mean,
And I'm the one, Shiva, thank you so much for being here, says sovereign gold, the sovereign gold bond, which was launched in India a few years back, is getting a lot of traction of late.
Well, it's because people are more, in India, people are more interested in gold. I mean, to me, it's a government instrument. It's a financial instrument, no different from any other bond or anything else. Yeah, it's like it's like tips, inflation protected, whatever. It's a form of tips, I guess.
And Hans 553, we've seen a lot of these, so thank you so much. You've been asking great questions. Says holding physical gold is about getting from one monetary system to the next one.
I agree.
That's a really good point. I didn't think about it as kind of a bridge loan into the future. So very interesting. And I want to make sure, because there's so many, I'm going to have to scroll a little bit now. Prof Godball, thank you so much for being here. Says what percentage of assets would be recommended as a hedge into physical since it's locked away with no yield?
There's no answer to that question. I mean, people who sell gold would tell you 10% because they want to sound reasonable. I mean, the example I usually give is like, think of it this way. If you thought, or if you had credible information that your house was going to be burglarized by dangerous people, I mean, what percentage of your family members would you have to sleep there? I mean, either the percentage is so small that you just get better locks and get a security alarm, or maybe you move out. And sometimes maybe you buy a bigger insurance policy. It really depends on how likely it is. I mean, if it's imminent, you probably want to have a lot of gold if the disruption is imminent. And if it's not, maybe not as much, but it depends on you.
So Market Sanchez says thoughts on the SDR, the possibility of precious metals being included in that basket of currencies.
It's a speculation. Some people have a theory that that's where it's going. I don't know.
So Does Know 9 says when gold price gets profitable, then mining will make more sense.
Sure. Sure. The mining properties, I mean, assuming they're run by honest people, which I wouldn't take for granted, and good management, which I also wouldn't take for granted, particularly in that industry. But mining shares are levered exposure. I mean, you're buying gold in the ground. So you're buying the future cash flow stream that costs X to extract, and the value of what you're extracting goes up. So yeah, it's a leveraged exposure to gold.
So David asked this question, and I'm not sure if you have the familiarity with crypto to be responsive to it. So DM Suave says, do you see any future for a gold-backed stablecoin as a currency or a store of value?
Very hard. Not feasible today because of the regulations. The thing with Bitcoin is that there is no issuer. So when Bitcoin is used for, let's say, illegal purposes, it can be confiscated from specific people, but there's no quote unquote issue. There's no Mr. or Bitcoin Inc. that sponsors this, that the government can go seize and close. If you have a stable coin backed by gold, somebody has to store that gold. And if that stable coin is used for some nefarious purposes, people who are storing the gold, who are responsible for the network on which it transacts, may be found liable. So it probably would be. And so in today's regulatory regime, I think I've looked into this a lot. There are a lot of issues with that. A lot of issues.
And this is part 2 of that question. So it worked out perfectly. What do you think of the U.S. government doing a federal-backed cryptocurrency digital dollar? Let's call it a Fed coin.
They already have a digital dollar. I mean, what would be the point of that? You can avoid I know there's a lot of conversation about it, but I'm not sure how is that different from the dollar we have today. It's all digital anyway.
Well, you are taking bills out of circulation now.
Oh, well, that's a totalitarian nirvana. I mean, that's
what we are. We are discussing in totalitarian nirvana how we don't become its victim, right? How we can
well, physical gold is one of those.
We are all looking to buy our way out of that totalitarian nirvana. We're all looking to get on. How much it costs to get on the boat to get out of there is, we're investors, right? That's what we're looking to do.
I grew up in the Soviet Union. I have 3 words for you: portable physical goods.
Yeah.
Portable physical goods.
Well, other than that $100 bill, was there anything else you had? Did you have any like postage stamps or gold or anything else? That was it.
We bought cigarettes in East Berlin on the way there to sell in Vienna. We had caviar to sell. I mean,
was there arbitrage? Was there a lot of arbitrage in those items?
Yes, portable physical. I'll repeat what I just said. Think about it: portable physical goods.
Okay,
impossible to defeat, and they work.
And so, does know 9 says gold will be the only under the table money if we go full digital.
Yes.
Yeah. It is what it is, right? I do fear a future in which that is the case, though. But I think that we can get there much quicker than I would have thought, and also much more violently than I would have thought before.
Look, what people of wealth need to understand, by wealth I mean people of savings need to understand, what you don't want is you don't want to find yourself one day in possession of controlled substance in large quantities. It's very important to think this strategy through, because if this is really a risk, you need to think about how you can ameliorate this risk. Because if you have your gold, let's say in the US or whatever country you live in, and your gold is there and you are there, and it's in physical form, and you have to carry it, and all of a sudden it's a controlled substance. I mean, imagine yourself with $80,000 worth of drugs. I mean, that would be an extremely uncomfortable situation for most people. There are people who operate in that environment. Most normal people do not operate in this environment and can really get hurt. And I think it's very important to understand that.
Okay, now we're going into the speediest, right? Because it's been an hour and 18 minutes and you're just so awesome. And people have good questions and it's just wonderful. So thank you very much. I just wanted to acknowledge Tracy is here.
Thank you, Tracy.
Tracy is just awesome. She really is. And Tracy was on 3 weeks ago. And we were talking about fossil fuels and green, and she was really, really helpful. So I'm just going to rip through some questions. So Asian Girly is asking, is silver going, and thank you so much for being here, is silver going to follow the trend of gold?
Yes. Different assets, more volatile, but generally, yes.
Okay, so R Ravi one, and thank you for being here, says, do you think it's a bad choice to get off the gold standard?
I don't have a view. I mean, it's a bad choice in the sense that we've overspent to the point now that we're going to have to. It's really hard to fix at this point. It's without horrible pain, but there has to be some limitation in the production of money. Whether it comes in the form of a gold standard or some other standard, I don't know. But governments are not good with that. And that's why systems periodically have to refresh, reboot. And that's kind of where we are now.
And Generator 16, and thank you so much. We kind of met yesterday in another online environment. So thank you for introducing yourself. Martina Booth said something like Trump has nationalized the Fed. True. And then they continue gold standard when?
I don't have an answer to that, but I would say that when you said earlier in the conversation, we were talking about the United States. The United States is the largest gold empire, aside from everything. I mean, there are conspiracy theories that there's no gold, and maybe that gold in Fort Knox has been pledged to somebody. But you know what? Possession 9/10 of the law. It doesn't matter that it's been pledged. In the extreme, the fact that the Federal Reserve Bank of New York holds massive gold deposits for other countries, possession is 9/10 of the law. In a real national emergency, the United States can mobilize this resource. How do you fix a balance sheet? One way to fix a balance sheet is to find an undervalued asset. If you have too many liabilities, what if you find an undervalued asset that you can revalue? So what if gold price were reset to 10 times higher? Maybe all of a sudden, the United States has a clean balance sheet. And that suggestion that's been made by Bill Gross a number of years ago, the former bond king. And that's what kind of Roosevelt administration did by revaluing gold by 75% in 1934 or 35, whatever it was. I don't put that outside of the realm of possibility that it would be the collapse of the dollar. Could be the U.S. government that proactively resets the system to prevent a crisis, to front run a crisis, basically, and maybe does it effectively.
So I'm the one, Shiva, and thank you so much for being here. It says by 2021, the Libra transition is planned. Do you think it would have a big impact on gold price?
LIBOR transition. I don't know. They're talking about LIBOR rates. I don't know.
Yeah. There is certainly a lot of uncertainty, and there's a lot of unknown unknowns. So Armando says, can 7 billion people own gold?
Absolutely. Matter of price.
I'm sorry, can you repeat that? That was very interesting.
7 billion people own gold. The answer is yes. People used to own gold. Some people own silver. I mean, silver is poor man's gold. It's always been like that. Gold has always been too valuable for small transactions.
Yeah. So Valina is here, and thank you so much for being here, Valina.
Hi, Valina. I follow you.
She's awesome. I'm gonna have to introduce you guys, so you guys should definitely speak. And Valina is just remarkable. So could China and Russia introduce a gold-based monetary system separated from the U.S.-led one?
It would be an act of war. I mean, think of the United States and the geopolitical positioning of the United States. If the United States dollar is not a reserve currency, I mean, that's a geostrategic debacle for the United States. It's a national defense issue. So, national security issue. And John Bolton, whatever we think of John Bolton, not much, many people, he did say a long time, but when you have that much debt, it becomes a national security issue. And that's one of the issues. That's one of the reasons I think physical gold is so compelling, is because in a geopolitical crisis where the country is acting not as it is, like the United States reaction may be to a financial crisis, not like a financial crisis, but a national security crisis. The level of repression and measures and controls that could be imposed in that situation is a whole different ballgame. And so, can that happen? I mean, that can only happen in the middle of some extreme conflict, or give rise to an extreme conflict. But certainly, if you read The Mandibles, which is a book by Lionel Schreiber, I mean, that's kind of the scenario. Not Russia and China, but Europe introducing Bancor, which is a gold-backed currency that Keynes came up with. that's kind of the scenario they laid out there.
You guys should do a Periscope together because I'm going to show both of you guys how to do it. And I've discussed it with both of you guys, so now we'll do it all at once because you guys are awesome.
Look at that.
What is that?
I'm thanking Velina in Bulgarian.
Oh, were you really? Oh, I want to learn how to do that too. I want to learn the words and then I'll mess them up a little bit because I'm not good at that stuff, like I said. So Sanjay, thank you so much for being here. And it's a whole bunch of numbers, so please excuse me. I probably wouldn't repeat them correctly. So Sanjay says gold is insurance, okay, but do you still wait for pullbacks to add physical to your portfolio?
I mean, okay. Pullbacks, what, $20 pullbacks or $500 pullbacks? I mean, I have people, I know people who've been waiting for a pullback to 900 since 1150, and they will be waiting for a long time.
I know, and I want to also make it clear that I'm not trying to persuade or be insistent. We're kind of discussing, we're discussing everything within a conceptual framework, right? So I think that's the best way to think about this because the arguments can present themselves, and then from that information, in between the mind and information, there's in between the mind and reality, there's usually a little bit of a distortion field. So hopefully, these series of conversations can kind of remove those a little bit and lift that. So I want to close on just the last few questions, which is you said gold is a very safe asset, but it assumes foreign protection, it assumes sovereign protection, extreme events, and invasion and such.
Yes. Yes, sovereign risk is a real risk. You have to manage it. It can be managed by locating your gold reserves in. There's no 100% anything here. So when the world is it's like World War II. Like what? So it's all bets are off. But Switzerland was there, let's say, during World War II, and it continued to be there. So you have to pick your battles. You have to pick your locations. It's an actively managed contingency plan. You can't just, there's no set it and forget it here. Every contingency plan like this has to be managed continuously, and that's why I decided to do it, because I couldn't find anybody who was doing it in a way that I felt it had to be done, and so I'm doing it. But yes, it's not a done deal. I mean, you have to.
So we're going to close off with a few different things, and again, you're awesome. I think this is just a fun question, right? Because I'm really big into Space Force. I think a lot of people know that. And Simon, you and I were discussing my enthusiasm for that yesterday, and yours also. And we just want more kids to get those educations, get the skills required to participate in it. So, can you imagine Mars exploration would end the golden age of gold, or it could give us? I want to be a futurist now. It could give us more of a need for gold, right? We could figure. Why not?
I have no. I
have to go with the bear case scenario.
We need to worry about in my lifetime.
Yeah,
that's what
things are quick, but if you can imagine a future where gold is mined from asteroids, which could everyone knows where I stand on it. You can also imagine a world where it creates new demands for gold. So there's a lot of contingencies, and they're fun to think of, but they're not too pleasant to imagine all the intricacies of them. Right. So invasions do render it unsafe. Partition of India also caused cause of disposition. Very true. And then I want to just end up. I think I'm ending up here. Let me make sure I'm ending up here. So I want to end up with Velina once again. What a wonderful way to end this discussion, because I've appreciated both of your time so much. So Velina says, I agree with Simon's reply to my question. That is why I'm following this development very closely. I want to thank everybody. And Simon, I want to thank you so much. You've been fantastic and so informative. And we all appreciate you taking all these questions and being so responsive to them is just wonderful. So
great.
Yeah. And I want to thank everybody for joining us as well. And, thank you for allowing us to be the guest on your Twitter feed. I hope everybody enjoyed it. And I'm going to close up. So everybody have a wonderful day. Bye-bye.
Thank you.